Welcome to XM.com. For this Forex Preview video, we'll be having a look at Canadian data and, of course, the outlook for the Loonie. I'm Cristina Marujos. Joining me today is investment analyst Cristina Partenido. So the previous CPI inflation report for November showed that growth in consumer prices was at 4.7% year on year, the worst in 2 decades. And taking into account the rise in US CPI inflation readings in December, do you think Canada could follow suit?
Hello, Christina. Well, December has been a quite challenging month for all countries. The impact of the new Omicron variant was uncertain early in the month, and then the fast spread of infection has brought further delays in goods and services deliveries because workers had to isolate again themselves. And besides that, the government was forced to resume some restrictions across the country. So perhaps the rise in inflation has further extended to December, and that is what forecasts are currently suggesting. Particularly, the annual headline CPI inflation is expected to inch up to 4.8% year on year. Interestingly, analysts believe that compared to November, consumer prices have declined by 0.1% in December. But as I said before, December is a sensitive month for prices, and historically, monthly CPI readings have been negative during the Christmas month, at least for the past 4 years. So the monthly decline may not attract much attention, specifically if it's around the zero level. Probably the headline and the core annual measures will be of greater importance, showing whether the problem of inflation, which has been mainly around the energy sectors, is reaching other sectors as well, increasing the case for inflation becoming something more permanent. Someone should also consider that the unemployment rate in Canada is not far above pre-pandemic levels, so the labor market could be tight enough to push for higher wages in the coming months. And even if higher paychecks may get a bit late to clearly emerge, the Canadian government has reopened applications for COVID relief grants to businesses and workers, increasing the case for higher inflation in the coming months if indeed regions meet the criteria for those benefits.
Turning now to the Bank of Canada, there is a big chance for a 25 basis points rate hike on January 26th, when the next policy meeting will take place. Could the central bank meet market expectations?
That's right, Christina. Currently, there is a 75% probability for a 25 basis point rate hike next week. And interestingly, investors price in 5 more rate hikes by the end of this year to drive the benchmark rate up to 1.75% from 0.25% today. That is an aggressive pricing to me, and I think it's too early to feel confident about such a rate hike path at the moment. I would rule out, of course, a rate hike next week if inflation spikes significantly above forecast this week. Many commodity-dependent countries have already raised their borrowing costs, such as New Zealand and Norway, but such a decision needs some strong backing from the data. So although inflation is high, and in reality could be even higher since some prices in the real estate are not included in the CPI measure, the central bank may wait and see whether consumption is slowing or remains resilient, and whether the labor market continues to tighten in the coming months. So I would say that if there is not much weakness in consumption and generally in economic growth in the coming months, a rate hike in March or April, which is also the timeline which the Fed is expected to raise its own interest rates, could be a wiser decision to me.
And finally, Christina, what is your outlook for the Canadian dollar this week?
Well, if inflation readings beat estimates by large, making a rate hike very likely scenario next week, then the Loonie could resume its post-rally against the dollar. And in this case, I would look for a break below 1.25, where the 200-day moving average is located. Otherwise, if the data come as expected or below expectations and retail sales at the end of the week disappoint, as in the case of the US, then the dollar Loonie could extend its recovery probably up to 1.26 again.
Christina, thank you for joining me today. This was a Forex Preview. Thanks for watching at XM.com.